I'm Lisa Pilkington. I'm the Completely Retail News Consultant, a BBC journalist and your moderator for all the sessions today. So let's do a deep dive. For our first panel debate, we're going to be looking at the empty rates burden, you know, the faceless tax, and the problems facing retailers and landlords and what potential solutions there could be. Now, I'm delighted to be joined by our expert panel, which comprises Shaylesh Patel, Principal Director of ASTOP, which supports and advises the charity sector, commercial landlords and CSR budget holders on property, financial and other matters. We also have Bassam Mahfouz, whose roles include being the Labour London Assembly candidate for Ealing and Hillingdon, and Ealing Council's Cabinet Member for Safe and Genuinely Affordable Homes. And last but by no means least, we have Christina Beggan, Director of Asset Management at Ellandi, one of the UK's leading delivery partners for investing in, transforming and managing retail and town centres. Welcome, guys. Thanks for joining us today. Now, I think we've got a couple of very quick slides. Have you, Shaylesh?
Yes, we can run through them as we're talking.
Okay, I'll let you have the clicker.
Click away.
So let's start off with a question for the audience. Who here is unhappy with the current business rate system? Let's see a show of hands. Don't be shy. Put them right up. Come on, I want to see you. Okay, so a fair few of you are currently not best pleased with the empty rate system, I think it's fair to say. Now, with changes to empty rates relief coming at the beginning of this month in England, what could these changes mean for landlords with empty properties? For those that aren't aware, I think it was on the 1st of April, they changed, let me just get my notes, to the empty property costs set to rise. The official reset period was extended from 6 weeks to 13 weeks, meaning a property must now be occupied for a minimum of 13 weeks before it can get the relevant 3-month empty property relief. Prior to that, it was 6 weeks. And Labour apparently said it would scrap business rates altogether if it wins the general election, so we'll see how that goes. So, Shaylesh, let's start with you, shall we? What could these changes, these new changes brought in at the beginning of the month, mean for landlords with empty properties?
Primarily, this has kind of been on the cards for a while because Wales and Scotland have already done this a couple of years ago. So I guess England's now about to catch up. It means that landlords and retailers with excess space probably need to look more carefully at the options that they have available to them about saving empty rates if they think that's still the right way to go. So there's other unusual channels out there. One of them is actually a tax break for supporting the charity sector. So it's more about using a tax break efficiently and ethically rather than managing loopholes. And I think that's where the trend is, because the consultation from last year about business rates, they never mentioned anything about reviewing the whole thing. It was literally about how are we going to manage avoidance and evasion. So I think it's just, this was our opportunity to try and run you through the options that are available. So that's why we wanted to do this with you.
Christina, what would your answer be?
I think Shaylesh mentioned the kind of closing of loopholes. Certainly there are some sort of more cowboy kind of loophole-esque initiatives out there, and you know, there are also many property owners who would rather lease vacant units to a better use if they could. So there's a bit of a balance between, there are some people abusing the system, but there are also, you know, most property owners are kind of minded to do the right thing, and if this is kind of going to help progress that further, then I guess in that sense it's beneficial.
Okay. Bassam, do you have anything you want to add?
Yeah, I think there's a real challenge on a number of fronts. So as we know, obviously, our high streets are facing significant challenges, and that is an impact on residents who talk to me on a daily basis about how they want to see their local high streets come alive. And you go outside of London, and very much it's empty high street after empty high street, and that's not good for our economy or for our communities. The other bit is obviously as a councillor and having been responsible for business rates and supporting businesses, is that we want to make sure that we've got a great microcosm of organisations and businesses operating. And again, we've got local authorities that have had about 2/3 of their funding cut over the last 14 years. Need to make sure that when properties are genuinely empty, actually that they are being brought back into use, and that's obviously something that Shaylesh and ASTOP have been doing. With my other hat on, I run a refugee charity, and so we've been beneficiaries of being able to tap into empty spaces. And over the last couple of years, we've grown the amount of support that we've been able to provide from supporting 1,300 people 2 years ago to 2,000 people last year. But we can only do that by being able to access the sorts of spaces that are sitting there empty, use the tax break ethically and morally to support charities like the one that I run in order to progress that. So that's something I'd like to see go forward.
Okay. Shaylesh, what do you think is the best solution for those looking to mitigate high business rates on their properties?
I've met an asset manager recently, and this is part of the reason why we're hoping Christina would be here, which is great. The best way to avoid empty rates is to ensure it's not empty, which sounds bizarre, but it basically, this was a tax that was created supposedly to incentivise landlords to get on and make deals quicker. So I'm just going to quickly show a couple of slides. So this is Ellandi at work in a shopping centre in Bootle. They've worked with 3 social enterprises. They've taken a long game view as to what to do with this centre. So they have a plan to invest several million in this. And as part of that journey, they know that some retail units will now become either leisure operations or bringing in doctor's surgeries or services that are kind of closer to non-traditional retail. So the best thing you can do is to avoid empty rates is to cut a deal a little bit quicker. Christina might be able to expand on this, but these are some of the benefits in terms of footfall, the organisations they've helped along the way, and obviously there is a financial reason for doing this as well. But the social side is becoming more and more important as ESG calculations kind of come into play. These things take time though, so the kind of interim option is to either leave it empty or work on the basis of, okay, what else can we do as a quick fire measure to have something where you can move on fairly quickly. So we've got a graph. Sorry, this one's a little bit heavy going, but you can either pay empty rates, spend 100 grand a year as an example. That's the blue line, and keep it empty if you want full flexibility. The box shifting intermittent occupation thing is the green line that will save you under the new rules probably about 40%. The yellow line is if you're a landlord with a team in-house that can move boxes around for you, the best that you can now achieve under these new rules is 50%. And if you work with the charity sector, you'll make savings from day one. You'll save at least 50%, and it could increase to 100% depending on your tax circumstances. So, as I say, apologies, it's a bit heavy going, but you can talk to me afterwards in a bit more detail. But these are probably the best options for avoiding empty rates.
Okay. Christina, would you agree with that?
Yeah, we look at a variety of options, and obviously, it's great to not be able to leave it vacant and to hopefully be able to lease it, alternative uses, try and diversify what kind of the offer that you've got, especially within a traditional shopping centre. In some cases, it's not that simple, it's not that straightforward. They're quite complex assets. So Bootle, as Shaylesh just mentioned as an example, there was a part of the mall that was kind of earmarked for redevelopment, and really it actually started as kind of a meanwhile use. The Big Onion, which is mentioned above, was sort of a social enterprise, supports up to 20 kind of businesses. It's an incubator for local businesses, and as an example, Mappy Coffee was born in the Big Onion and now has its own high street coffee shop. So it's really kind of growing those local businesses. That then feeds back into kind of social impact and the social value that we're able to add. And that's a local authority-owned shopping centre, and what was kind of a meanwhile use while the shopping centre is being redeveloped has really grown arms and legs, and we now have about 14 different social enterprises within the shopping centre. Our marketing budget has benefited because the marketing budget is actually quite low, and the social enterprises fuel all of the events, and a lot of the events and the footfall are driven by those. So it's difficult to it takes time, and once you're able to kind of measure those things like the social value and the impact it can have, it's really positive.
Bassam, as a councillor, is there an argument to be made that keeping business rates high helps you fund the towns you look after?
Well, completely honestly, all of the business rates that we collect on behalf, it's on behalf of the government. So we have to give it to the government, and then they determine what we get back. So actually, people always have a go at us as a local authority for being the people who collect the business rates, but we're just at the front end taking the money, but we have to pass it on to the government, and then they decide what we get to pass on. But I think the key thing is, and obviously every so often everyone will have gone through it recently. Obviously, you've got the re-evaluation, how that impacts on people. As a business right now, certainty is the key thing, and we haven't had that for a number of years. And I think until later on this year, when an event happens and perhaps there's a change of government, we won't. we haven't really got a government at the moment driving anything forward. So at least we'll start to get some certainty. We'll start to get confidence back into the markets, into retail. And I think one of the Christina's points there is about actually, obviously this isn't the right use every single time, but by providing an empty space to a charity, you can really drive the footfall and the change, the feel of the retail space as well. So it's not that going into that sort of ghost town, but actually having something that's there. And I think sometimes people feel, oh, it's a charity and therefore it's going to be low-end stuff, but actually it could be it's a social enterprise, an incubator, and so on and so forth. So there's really good opportunities there to drive this change.
Great stuff. Christina, you mentioned it takes time earlier on. How long, on average, does it take to re-let a property? And do you think the current relief period is sufficient?
So I think the BPF recently commissioned a study on this to kind of present to government when the rates reform and things have been in discussions. The average length of time that it takes to re-let a retail property is 12 to 18 months. There are variances between offices and industrial, which may be, but it's nowhere near the kind of 6 weeks, 13 weeks empty relief that's kind of been on the table or is on the table. So there is a bit of a mismatch, certainly in that sense.
Yeah, that's a big mismatch.
Big mismatch. Yeah.
Is that the same for retail as well?
Yeah.
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 Wow, okay. So the current business rate system's been in place now since 2008. What should this, or most importantly, the next government, do to help alleviate the pressures caused by business rates? Bassam, let's go to you.
Well, obviously, what I'm standing for is the London Assembly. We actually did a piece of work recently in terms of the committee, and I'm hopefully I'll be on the Economy Committee if I get elected come this weekend. But we did a study in terms of empty rate relief, the box shifting, what can we do around that. So I think at the moment we've done that study as to what we can do to improve the situation with the current deal. I think obviously the new government will come in and hopefully come in and change things. I think as I go back to the key thing for most businesses is about having uncertainty about what's going to happen, and so on. And I think people don't mind paying more. We can see business improvement districts popping up all over the place, and the day job is in Kingston, where we have the first business improvement district anywhere in the country, and actually they add significant value to the area that they operate in. So I think most business people I speak to, it's about how the money gets spent rather than how much money they have to contribute. So what they want to see is good services, and that's what we're going to be focused on.
Shaylesh, what do you think this or the next government can do to alleviate pressures?
If I'm honest with you, it's been 13 years since empty rates was introduced just like that overnight without any consultation. Something's happened again now. Both Labour and Tories have had time in those 13 years. And to be frank, it's one of those taxes where you don't lose many votes. So although it's unpopular in this room, I don't think it will shift much very quickly, because Labour have said they want to change it. Tories have grumbled along those lines over the years, but they don't really seem to change anything dramatically. So honestly, I'm not sure if it will shift. If it does, then that's great. But it's just, if I'm struggling to get votes, I'll throw beer tax reductions and stuff like that out there, but I might not reduce business rates next.
I think I think the reality is there's going to be so much that the next Labour government has to do in terms of undoing all of the mess that there is across the whole range of things. So the challenge will be prioritising that, and we've been clear that actually it's going to be a decade of national renewal. It's going to take that long to get the country into a good place. So this, I think just to sort of set expectations that where we are as a country, when I speak to people on the doorstep, they are so despondent about how bad certain services are. The NHS as one example, but the housing crisis and so on and so forth. There are so many other.
So Bassam, let me be clear, you're lowering our expectations.
Well,
These
things are absolutely things we want to do.
Yeah, yes.
But it's about time frames.
Okay, Christina, would you like to add anything to that?
Yeah, I guess I'd just reiterate that there's the empty kind of rates burden which we've discussed, and I think there's something to do there in terms of if landlords can show that they've been marketing a property and trying to invest in it, because quite often they're not in a condition to relet, so you have to put some capital into the property to relet it. If they can demonstrate that they're doing all those things and not just sitting on their hands while they're not incurring empty rates, then perhaps there should be some relief for those property owners. And then the other thing is just kind of on the wider rates debate. Appreciate that NHS and lots of the other kind of real key voters' issues are much more kind of at the forefront. I suppose when we think about not just the empty rates burden, but also how that impacts retailers, how that impacts the performance of many businesses across the UK, it impacts their bottom line, and it's really important to kind of get right from their perspective as well as property owners.
Great stuff. Thank you, guys. There's some really great insights there. Before we close, we've got time for a quick question or two from the floor. If anybody would like to ask our panel anything this morning. Anyone? No? We're all being very shy this morning? Okay.
Empty rates, a thrilling conversation.
A nice meaty subject to get started with.
I once had one of my colleagues say that she had an interesting conversation about local government finance. That's the first and only time I've ever heard anybody say that. So
interesting. Thanks to our panellists and you, the audience, of course, for coming along.